Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two stocks that score a perfect 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two companies that score a 10 out of 10 on the TipRanks Smart Score. This is a data-driven scoring system that looks at 8 unique factors and measures a stock's likelihood to outperform the overall market. On top of that, these stocks also come in with a strong buy consensus from Wall Street. So we're going to take a look at the companies, what it is that they do, and what those analysts are predicting for the stock's future. We found these companies today on the TipRanks Top Smart Score stock page. Found underneath the Ideas menu with the top Smart Score stocks, you'll find a list of companies currently scoring a 10 out of 10 on the TipRanks Smart Score. You can narrow down by market cap, sector, and how long they've had that top score, and then we look down below here. Just before we get into these two stocks, this is a friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. We're getting really close to that 70,000 subscriber milestone. I appreciate you all greatly. Thank you so much for the support. Now let's jump right into our two 10 out of 10 stocks. First on the list today is Onto Innovation. They trade under the ticker ONTO, currently priced at $175. The stock has seen some ups and downs this past year. Year to date, they're up 14.5%. They're down 17% in the last 6 months, back in the green over the last 3, but are in the red this past week. They do score a 10 out of 10 on the TipRanks Smart Score with bullish blogger sentiment, very positive crowd wisdom, and positive technicals. Onto Innovation develops process control systems. They design, develop, manufacture, and support process control tools for the semiconductor and advanced packaging industries. Their main activities include the production of those process control tools that perform optical metrology on patterned and unpatterned wafers, wafer macro defect inspection, wafer substrate and panel substrate lithography systems, and process control analytical software. And they just recently announced the acquisition of Lumina Instruments and a lithography business, saying it will help expand their inspection capabilities for unpatterned wafers and panel substrates and enhance their IP portfolio and lithography R&D team to accelerate panel lithography development. They announced that acquisition on October 31st, the same day that they came out with their Q3 earnings and revenue beat. For their third quarter, they reported earnings per share of $1.34, beating expectations by 2 cents per share. Revenue came in at $252 million, which was up 21%, beating expectations by over $1.1 million. They said that this was led by a recovery in advanced nodes and continued strength in advanced packaging support from strong AI demand. They also had record quarterly revenue from power semiconductor customers and record quarterly inspection revenue led by their Dragonfly platform. As you saw on their chart, the stock is in the red this past week following that earnings report, but one analyst from Stifel says that the sell-off seems too harsh. They said the reaction feels too harsh given a still strong fundamental and better relative setup for the company next year. They understand concerns around near-term high-bandwidth memory visibility. However, they believe the upside strength of TSMC chip-on-wafer-on-substrate expansion plans remains underappreciated. Given the company's differentiated AI packaging exposure and stronger growth prospects, Stifel believes that 20 to 30x is an appropriate range for the stock and will be adding to positions at current levels. Another analyst from Jefferies weighed in. They did slightly lower their price target, saying the pause in HBM is still underway, but strength in advanced RAM and power semis help offset the continued delay. They added that a return to robust growth should just be a matter of time. With 6 current analyst ratings, the Onto stock does come in as a unanimous strong buy. And the average price target of $261 would imply an upside potential of nearly 49%. Looking at those ratings down below, our lowest price targets are $230 for an upside of 31%, while our high-end price target is $280 for an upside of nearly 60%. And our second 10 out of 10 stock today is Ceco Environmental. They trade under the ticker CECO, currently priced at $24.89. This is one we have talked about before. I believe it was around August here sometime. Year to date, the stock has gained 22%. They are in the red over the last 3 months, but gaining this week. In fact, they're up 9% today. Currently scoring a 10 out of 10 on the TipRanks Smart Score with increased hedge fund activity, insider transactions on the rise, and very positive crowd wisdom. Ceco Environmental provides engineering technology solutions in regards to the environment. They're developing and creating the technologies we'll need to control environmental air pollution, promote clean and efficient energy, and maintain environmentally sound handling and filtration of various fluids. They offer on-site installations of their technologies and support to maintain them in practical use. They boast a wide-ranging customer base, including firms in the aerospace, automotive, cement, chemical, and fuel sectors. Ceco just announced they'd be acquiring Profire Energy. The deal is worth $125 million and will expand their leadership position in niche energy and industrial markets with expanded environmental solutions for mission-critical applications. And that acquisition was announced alongside their Q3 earnings report last week on the 28th, but they did see an earnings and revenue miss. Third quarter earnings per share came in at 14 cents, which was 6 cents shy of expectations, and revenue of $135.5 million was down 9% year over year, missing expectations by about $20 million. The company did produce record Q3 bookings and had the highest ever backlog of $437.5 million. They said that their Q3 revenues impacted by customer-driven project delays. Following that quarterly report, we did have an analyst from Needham who reiterated a buy on the stock, saying they still had a positive long-term outlook despite some short-term setbacks. The five-star analysts recognized the potential for recovery and growth, saying that the company's orders have reached near record highs, and with October's expected orders exceeding $100 million, Ceco is poised to increase its already substantial backlog. Another significant factor is their strategic acquisition of Profire Energy, which is expected to enhance their position in the energy and industrial market, and the company's initial guidance for 2025 suggests promising low double-digit organic growth. Once again, we have 6 ratings on the stock, all coming in as a unanimous strong buy. And the average price target of $34.60 would imply an upside potential of 39%. Looking at the ratings down below, our low-end price target is $33 for an upside of 32.5%, and all the rest come in at $35 for an upside of over 40%. So that is a quick look at 2 stocks, both with a strong buy consensus from Wall Street and currently scoring a 10 out of 10 on the TipRanks Smart Score. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. And keep in mind, these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own due diligence and research. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.